Good morning, everyone. Welcome to your Daily 5. Today is May 19th, and I'm Leslie Jouflas with Trading Live Online. And this is always a fun show for me to do. We're going to be updating primarily the indexes today, because I think if you really get a handle on the indexes, that's going to make your individual choices probably a little bit smoother. So as you know, we've had a lot of volatility in the markets lately. So I'm going to be showing you some slides, or excuse me, not some slides, but some charts today. And we're going to be looking at a number of charts. We're going to look at the QQQs here, proxy for the NASDAQ today. And we're going to look at the Dow Jones Industrial and the SPX and a couple intraday charts of the S&P 500, so we can kind of get a really good perspective of where prices are and where they may potentially be going to, and some important price levels for you to be keeping an eye on. Now, I know this looks like just a jumble of charts here, but let's just start up here on the top row, QQQ, Dow Jones Industrial, and the SPX monthly. Now, what I'd like you to notice with this is these Fibonacci levels that are on here. Now, these are showing us a retracement using the March 2020 lows up to the highs. So if we look on the left at the Qs, we can see that retraced down to the 0.50. We can see the Dow Jones Industrial has not reached the 0.382 yet. So that's been the stronger of the indexes. Excuse me. And then over here on using the SPX, you can see where the 382 retracement is, but it just sort of barely missed it. It's sort of a near miss on that. And that is sort of an important thing to be taken into consideration right now. A lot of times when something comes very close to a retracement, or like I use pattern recognition, close to completing a pattern but doesn't quite do it, that creates that line of support now with that low. So if it were to come back down through, I think chances are good that it's going to break that 382 level. So I'm going to expand. Actually, I'll start with this chart here. I'm going to expand the INDU. Just ignore these big yellow circles. I had so many charts up, I had to mark them with the yellow circle so I could make sure to put the correct ones up. So some of you might remember from the last few months going over the indexes that this pattern is a reversed ascending triangle. There's not a lot of information on this particular pattern. You'll find lots of information on ascending triangles as reversing patterns, but not the formation of a reversed ascending triangle. And that's when you have the lower trend line is horizontal and the upper is ascending, and that's what makes it a reverse pattern. So this is what I found on it from H.M. Gartley. But however, he did not give any type of price projections for it. But if we really look at this pattern, we can see that it is somewhat ominous looking because of this very long sideways. Even though the Dow made new highs, it really is a sideways type of a movement. And these types of movements, when they break, can bring very powerful moves with them. So the level here, if we break this low on the Dow, the first level to look at using the March 2020 lows is going to be this 382. So it's yesterday, as we all know, May 18th was a very big down day, and we're going to look at an intraday chart of that. On the next chart, I think we'll take a closer look at, we'll try to, is the SPX monthly, because I think going out a little bit longer term is a good thing to be looking at right now. And this gives us a perspective of the last few bars of the monthly You can see how close the opens and closes were. Well, now we've decisively broken below that. So that also is, in a sense, a form of a coiling, where the market has some indecision on really where it wants to go. These are indicating that with support here, and we've broken this support, and you can see that kind of near miss to the 382. That's just above the 3,800 level. But if we break that, then the 0.50 is going to be the next area to look at. Now, on the monthly chart, you can see the RSI has been making lower lows and lower highs. It's currently still kind of holding just above the 48 level. However, with more momentum to the downside, I would expect that to go to lower levels. So now let's take a look now at this SPX weekly chart. And this is the one that if you've been following these videos has this head and shoulder pattern that I've been following. And it has decisively broken the trend lines for this pattern. There's been, you can see here, a test of this trend line here. The prices are staying below this one here. So a break of the 0.382 level, just above that 3,800. And again, that brings us down to the measured move target of the head and shoulder pattern right around that 0.50. Okay, now let's take a look at a couple of the intraday charts on the S&P. I really like to combine time frames and use even with the different time. If I have a 2 or 3 different 60-minute charts, I might be looking at different things in a different way on those charts to try and give myself a broader view of what the prices are doing. So on this particular chart, this is a 60-minute intraday chart. And there was this previous range here that broke to the downside. And if we were to do a measured move from high to low projected down, it was this move from here to here was just almost exactly the same distance here. So it met that target. And then this rally we had up the last week or so, we can see using my horizontal cursor, you can see where this yellow circle is here. It went right to that gap area and found very strong resistance at that level. So we now know that this area right here, just right around the 4,100 level on the S&P is strong resistance. If the market were to reverse and come above there, I think that would be a very bullish signal. But right now, that's not what my expectation is for right now. The other thing I'd like you to notice on here is some of the slope and angles. So let me just give you kind of a section here. Going to go from where this move below that gap was here, this down move from this high to low. And so that's making the slope and angle of that price movement. And if I clone that and just move it over, notice how far away, look at all the white space between this slope and angle and that price movement from yesterday, the downtrend day that we had. This is showing us that there was quite a bit of momentum to the downside. And we knew that just from, the amount that the market was down. But this is also a good way to see that there's a change in the sentiment. There was much more feeling of participants wanting to get out of the market yesterday, and we can see that through that. Now, on the rally to the upside, the RSI did not really get into a really bullish area on this rally. So that was a warning too. The RSI now, if prices were to rally, then it's got to get above these last peaks here, or it's still looking like a bear market rally. So let's take a look now at this 60-minute chart. So this is our second 60-minute chart, and this is giving us a little bit different perspective. From this swing low to high, you can see that we've come down through all of the fib retracements here. We got a little bit below that 127 before that last rally. Well, this is a downward sloping parallel channel line. And you can see the prices popped out of there a couple of times, but it's also acting nicely. You can see when that rally occurred, got just about to the top of that channel. We reversed right back down to the center and then broke those lows again. So I think if we don't break these lows first and we do get a rally back up, I think it's going to be back around that 39.30ish to 50ish area. And then I would expect resistance. And that's if these lows don't break first. So our last chart today that we're going to look at is going to be this intraday chart. This is a 20,000 tick chart of the S&P 500. And previous to this big downtrend that we've just seen the last couple of days, there was A, B, C, D sell pattern. This is also a butterfly pattern because this C to D leg extended above this previous high right here. And down here that preceded the rally to the upside was an ABCD buy pattern, also a butterfly because that D point exceeded that previous swing there. So this green line right here, that's where these lows were. That's the 38.50, 55 area. I think the Globex got to 38.56. And so this level right here, it's got to hold on a closing basis. So sometimes prices can pop through, but they'll come back up. So for this to break, you've got to be seeing closes below it. But I think today we're just going to be getting some back and forth movement. But this is the level to be watching right now in the S&P, the 38.55 area. And if that breaks decisively, then those fib levels that I showed you, the retracements on the longer term charts, are going to be the areas to be watching. Well, that's it for my presentation today and the charts I have for you today. If you like this kind of analysis, please come over to Trading Live Online. I do our weekly market setups and we do in-depth analysis on the indexes, stocks, ETFs, other futures markets. So I hope to see you soon. If you have questions, feel free to email me.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.